Good morning, afternoon, evening, and welcome to Autofin Path, where we bring you the latest and most relevant updates in the world of finance. I'm your name. Let's dive into today's top stories shaping the U.S. economy and markets. First up, all eyes are on the Federal Reserve as it prepares to announce a policy move this week. The Fed is widely expected to cut interest rates by 0.25 percentage points, bringing the benchmark rate into the 3.75 to 4.00% range. However, the decision comes in the midst of a significant data shortfall. The U.S. federal government shutdown has delayed key economic reports, making it harder for the Fed to assess labor market and inflation trends. For investors, the Fed's communication will matter nearly as much as the rate cut itself. Watch for the tone. Will cuts persist, or is this a one-off move? Autofin Path Insight. A rate cut can ease borrowing costs and support risk assets, but lack of data means higher uncertainty. Stay alert. Turning to the markets, U.S. stock indexes posted fresh record highs recently. The S&P 500, the Dow Jones Industrial Average, and the Nasdaq Composite all closed at or near record levels, supported by strong technology earnings and optimism around global trade talks. In particular, tech giant NVIDIA Corporation saw a jump following announcements of AI supercomputer deals with the U.S. government, which boosted investor sentiment. And don't overlook the role of trade. Signs of easing between the U.S. and China are helping to fuel the risk-on mood across markets. Autofin Path Insight. The rally is broad-based but heavily tech and trade-driven. That means while upside remains, a shift in sentiment or policy could trigger a sharp move. Meanwhile, in the bond markets, what's interesting is the relative calm. Despite concerns over U.S. public debt, inflation, and potential market stress, implied volatility in U.S. Treasuries has plunged to its lowest level in years, signaling investor complacency. This